Hello traders, welcome. Today is Thursday, May 19th. Welcome to this live intraday strategy webinar, guys. Eileen, Permendra, appreciate that. Good morning to both of you. Rick, Mark, Kelly, Joe, Hussein, not going to get to all of you, but good morning to everyone here in the room. So to start off the session, we do have some things on the move. Looking at the dollar index, you might have seen Jamie just tweet this chart. I also tweeted this last night. We're looking at that structural resistance, guys, that we were looking at yesterday for the index. So we're pretty much there right now. Also note that we're already pushing the April highs, the swing low from March. So we're looking for resistance around these levels. Wouldn't be too surprised to see a little bit of a stretch higher. If you guys remember this basic trend line, which has continued to offer some sweet pivots, both on the resistance and support side, that's just a bit higher, backed by the 50% retracement of the entire yearly range. So nothing has changed as far as the dollar index is concerned. Still looking for some resistance here. Remember the game plan as far as what we were talking about yesterday on a weaker dollar story. You'd look to play some of that rebound in Aussie, maybe a little bit of a rebound even in the pound, which is kind of at resistance, so I don't really touch that yet. But also a dollar CAD on the strength side of the index was a good play. That's testing some resistance at this point as well. Euro dollar's at initial support. And we'll jump into the Aussie crosses, Aussie dollar and Aussie yen as well. All right. As usual, any questions or trade setups, feel free to throw them on the message board. Also, to anyone who's new to the room, I see a couple of new names. You do have that camera button in the top right-hand corner of your screen if you need to take a freeze frame or a screenshot of anything that you see on the webinar. All right, so a quick look really before we move off to the 30-minute on that dollar index. Still looks like this. Gold, by the way, is beautiful. We'll go over that as well. But here's that trend line. Basic trend line resistance, structural resistance, whatever you want to call it. We're right there right now, okay, on building divergence. Price action making a new high, the oscillator making a lower high. So again, looking for sort of that near-term exhaustion high in the dollar index. Okay, so before we move off, gold beautiful if not holding, if you're not holding bullion, right? Eileen says, yeah, I mean, if you are still long the trade or you're holding physical gold, again, depends on your duration. Not everything is as short-term as this webinar. Longer term, you know, it really depends what your time horizon is, but there you go. So as far as the dollar is concerned, did yesterday's FOMC release change anything? So I want to spend some time real quick just to go over sort of where we are on that front. You know, we've been following a couple of things. One of them has been the world interest rate probabilities as presented here by the Fed funds futures. And if you recall, earlier in the week, we were looking at a pretty pitiful expectation. If I can remember. Let's just go back to the intraday page here. Okay. I don't want to spend time looking for it right now, but listen, if you look at the probabilities for a hike, if you guys remember, this was at like 6% earlier in the week. As we moved into it yesterday, right ahead of the release, we went over it in the webinar, it was at 14%, right? Here's the change post the FOMC minutes. So the expectation for a June hike is still at 30%, okay? That's not really the consensus yet. So while everyone's talking on, again, these financial publications, really good to see the divergence in what the market is expecting and what headlines and all these things are saying. At the end of the day, the material expectation for the first real interest rate hike at this point moves up. It was February, just a week ago, now to essentially September, right? 60% chance. So this move in of the interest rate expectation has continued to feed the dollar index rally. And here we are at resistance as the probability of a hike peaks at just about 30% here. So things to pay attention to when they matter. At this point, it's starting to matter, right? Because you're seeing that shift from February expectation to December. Now all of a sudden it's ahead of November. You're in September territory. That stretch real quick in any type of shift in the expectation always gives you some sort of pullback as far as the consensus is concerned, right? Everyone crowds into, okay, June. Okay, yeah, it's not going to be June. Or something to that effect. So I'd be weary here. Price is at resistance. You're seeing the probability of a hike really spike into territory we haven't seen. And essentially, as a magnitude of 10, here we are at 30%. Feel like I'm on a promise now from the Fed, but the cynics in me tell me not to believe in a June hike. Gary, again, for our purposes here, we're going to play it as it comes. I don't see a June hike either, Gary. I'm right in the same page as you. Look, they have the Brexit, which doesn't happen until after, right? They have the concerns with the material slowdown, at least what the data might be showing going on in China. That's kind of been mixed lately. But in general, all those global threats, I'm not sure if you saw, there was someone who tweeted yesterday how many times the word count came for global threat and all this nonsense. You know, it's very hard. I think this is their first sort of dipping their toes in the water to really prep markets like, hey, it's imminent, right? Now listen, Gary, we both could be completely dead wrong, and they might do it in June. At the end of the day, also keep in mind that a Fed hike is likely to fuel some more strength in the dollar, although we're starting to price it in now. But if this stays at 30% and you do get them hiking, it's going to propagate further dollar strength, which is, again, going to start weighing further on exports, which starts to put a concern on slowing down the rate of inflation, which of the Fed's two mandates is the laggard, right? Keep saying that employment picture is pretty much there. You know, are we really at what the employment headline figure says? That's debatable, but long story short, the focus has been on inflation. So look, I'm not going to, say this is what I think they should or should not do. It's a very difficult position that they're in. At the end of the day, inflation is picking up, and the U.S. economy really isn't on all that bad of a footing. But with all the global threats that go on, and with this sort of free money that we've reined in for the last, 8 years, I'm sure the Fed is concerned about the impact that would have on the markets. And with the fragile state that we're in, it's like stuck in between a rock and a hard place. There's really no right answer. They waited too long. Long story short, they waited way too long. They should have been, we should have been off zero last year, in my opinion. But in any event, Gary, it's a great discussion. But from a trading standpoint, what does that mean? Again, weary of continued dollar strength from these levels. We'll continue to track this as we move forward. Here's what the relative performance of the greenback looks like heading into the U.S. session. You're pretty much stronger against all your major counterparts, getting a little bit of a pullback in dollar yen. We'll look at that coming into former resistance as support. British pound, again, I still like the long side. I think it's a little bit of an exhaustion here, so I wouldn't necessarily be looking to get any new long from here. But at the end of the day, definitely looking we'll look at those targets. We're coming off some near-term resistance, but I think you get an opportunity to get back on the long side, both on pound and pound yen. Biggest loser on the session, Canadian dollar down 0.62%, and that puts dollar CAD into initial resistance target 130.97, 131.14, big region for dollar CAD, and we'll look at that in a moment as well. Keep in mind, I guess we'll come back to the data. So first things first, here's what the Aussie data looked like yesterday, and let's jump right into the Aussie dollar. All right, by the way, dollar index making that final push here. See if we can get that tag of that longer term trend line. And again, the close today is going to be paramount. Big region. See if we can't get some entries here on Aussie as well. Here's what the Aussie dollar looks like on the daily chart. Coming to the bottom end of the structural support, if this median line formation is in play. So I've readjusted these a little bit. This is what it looked like from last night's update. We readjusted this a little bit from earlier in the month. If you guys remember the Aussie update from there, we were using this sort of 3-point ABC. Now we widen it out a little bit. Looks like it gives us a little bit more of a pivot just with the lows that you made in late April and the highs that you made here in early May. But long story short, we're basically there. And this is the 50% retracement of the entire 2015 range. That's 72.11. You also have the 50 line right here for the current formation that we're breaking below. So it's pretty big at this level. Here's the 30-minute looks like on Aussie dollar. So no change from last night's update on that. Let me just put this up a little bit. So I kind of caught myself yesterday continually trying to test the bottom here. Booked a like 10 pip winner, and then we got stopped at break even on the rest. I took another 13 pip stop earlier. Kind of still looking to test the waters, but you're getting some building divergence on all accounts, both on the 5-minute and sort of, well, the 1 minute just broke, but you had the 5-minute divergence that was building. I do think that you fake this out into a final drop. Here's what the Aussie data looked like yesterday. On its face, it did look weak because the headline unemployment change, we were looking for a gain of 12,000, came in at 10, and a slight downward reduction, a revision of the previous print. But then everyone looked at the unemployment rate and said, oh, we were expecting an uptick, and it held at 5.7. True, but the participation rate dropped from 64.9 to 64.8, and we've long here told everyone in the room to remember that drops in the participation rate will tend to put artificial downward pressure, okay, inherently, just the math of it, on the headline unemployment rate. So kind of a mixed batch, not really good, not really bad, status quo, and it couldn't really prompt a drop. Here's where it was when the release came out. In fact, the release prompted a drop right into that 618, which held for a bit, just kind of why we tried to tempt the long side. But here we are again. Looks like it's sort of struggling to break lower. Outside of any relevant data from the United States, you do have existing home sales tomorrow, not essentially going to be a major player. Economy still looking for some sort of exhaustion low. Definitely don't want to be looking to short this from these levels, especially with the dollar index sort of at this resistance. If we close lower, we're going to miss the move, but again, from a trading standpoint, there's not really a play you can make. Gary, I'm going to take your comment there when we jump into dollar yen. I think it's going to be above 110, to be honest with you, that 66 level. We'll take a look at that in a moment. Any questions on the Aus? So continuing, still looking for long triggers into the U.S. session here. You kind of need to get back above 72.10 here to get the confirmation of the conviction for a near-term reversal. But targets are unchanged. So if you do see a subsequent push lower here and you're holding shorts, next target 71.40, and then you'd be looking for 70.60. So now or never for Aussie dollar, Kelly. Yeah, I think so. I think it's today's close. And it's sort of like what was happening yesterday with gold, sort of like what was happening with the S&P 500, right? That was coming into some key support for the S&P, which looks like it's going to press again today. And gold with the reversal all of a sudden yesterday, everyone was getting real bullish again. But as we highlighted here in the webinar, the game plan played out pretty well. So we'll go over that in a moment as well. All right. So moving right along, there's no more questions on Aussie dollar. There was a very similar setup in Aussie yen. A little bit of a wider range. 24 pips is a quarter of the Aussie dollar trade. Aussie yen was showing about 32 yesterday. Here's what that one looks like. The daily chart is ugly. I'm going to grant you that. Wasn't really too, impressed by that setup per se, but on an intraday basis, still looks pretty clean. So you're basically looking at a very clean consolidation right above the monthly low day close, which comes in at 78.82. Okay, so you're looking for a break of this triangle formation, wedge formation, what have you. A lot of, again, typically these are continuation patterns. So if you do see a break sub 78.82 at this point, sort of validate the next leg lower. I'm kind of thinking that you could get a test of this region and then a break to the upside just on account of what we're seeing in dollar yen with broader yen weakness. And then with what we're seeing in the Aussie dollar, which again, expectations that we should be rebounding off of some near-term exhaustion support. So if that materializes, sort of like a perfect storm here, might be a nice little rebound play in Aussie yen. Inevitably, you'd be looking to get back on the short side for the trade, but the resistance region that you'd need to clear would be right here into 80.66. And 80.66 is a pretty decent zone. It's basically last week's high, a nice pivot low from early May, the April low. Okay, it also converges right on the weekly opening range high, basic triangle resistance, and the upper median line parallel. All of that is stacked up between 80.55, excuse me, and 80.68. Okay, so big region of resistance. That's sort of the level to beat for a snap play. Such a scenario, you're basically looking for like 82.40 on the stretch. Nice confluence resistance there from a Fibonacci standpoint. So do you trade the range consolidation patterns or mostly wait for the breaks and confirmations of the direction like in Aussie Yen? You can play the inside. I wouldn't have no problem taking a long with a decent trigger off 78.82. Right? I was actually tempted to take a long here instead of the Aussie dollar yesterday. It would have been the same result, I think, but at the end of the day, we were right in the middle of the weekly range, so I couldn't justify it, right? Here's your weekly open. There's your weekly high. It's kind of just shooting blanks there. So, yeah, feel free if you're, again, you want to stay light as far as your leverage is concerned, but you can play the range until we break out. Medium-term traders, guys who are looking for a little bit of longer term, will definitely like to play this type of breakout play for the Aussie Yen. Although I have to say the momentum signature still isn't so, so convincing as far as the breakout is concerned just yet. Nice divergence, but quick and hard rejection of the 60 level on the rally yesterday. Okay, any questions on the Aussie Yen setup from last night? No change to any of our levels. We'll continue to track this one as we get into the close of the week, but I do expect that we'll see a final break of this consolidation range at some point. Over the next day or two. Okay, Aussie covered, Aussie Yen covered. Let's jump into last night's radar charts. So first up is gold. Let's just work the top-down approach here for gold, just kind of justify where we are in price. Remember if you were in the webinar yesterday, we added that pitchfork. We were working with the initial pitchfork off the May highs that was adjusted for slope, and then we added another pitchfork on the broader move. And if you guys remember, the parallels lined up perfectly. I didn't even know that was going to happen, guys. We did that together on the webinar. So they lined up right on target. Kelly, I'll come back to that in just a moment. Okay. So the parallels continue to play perfectly. You actually saw a rally hold right at the former upper median line parallel. Whoops. That got rejected, a downside break, and here we are looking for a drop a little bit lower into like 1242. We're chilling at 1246 right now, which is a target. We'll go over that in just a second. But one thing we want to highlight is this. From a weekly standpoint, all you did was come into the 2015 high week close that was made early in the year in January. On a close basis, I mean, this, it's just sick. Perfect. Perfect and exact rebound. Okay. Next downside level of major key critical importance is still going to be the February high week close, and that comes in at 1237. This is a longer term weekly chart, guys. Excuse me, and also note the building divergence. Equal highs in momentum, obviously much more substantiated highs in price. So from a weekly standpoint, looks pretty vulnerable heading into the start of this week. We moved into the daily chart, on Sunday, and we talked about the fact that, look, we're trading within the confines of this ascending median line formation. Risk remains to the downside below that 1292, 1293 region. Again, you got the monthly open, you got the 2015 high week close, you had the median line off the lows here, and the range that we were looking to play was this consolidation into the median line with the downside break favored. You had a nice trigger in momentum on the daily chart. It doesn't get much cleaner than that, especially on a multi-touch, multi-month support trigger, taken off the low in price, not the low in momentum, right? And then you jump into the 30-minute, and doesn't get much cleaner than that. Okay, so we came, held as resistance. I actually thought we were going to get a little bit more of a pop to the upside here. Didn't even get it, and there actually was a near-term trigger that gave out. But long story short, here we are, convergence or confluence support into that 1241, 1242 major key resistance. Okay, 100% extension confluence on the 618. Also keep in mind you have the lower parallels there. And just lower, 1237, we talked about that. Next area of interest on the daily chart as far as significant support is concerned. So for the gold story, the technical structure remains exceptionally clean. Exceptionally clean. Really no change to any of the targets or any of our outlook here. 1246, I think I've removed it since, but here's what 1246 was. We're kind of sitting there right now. I just want to see, I highlighted it here. February high day close was actually in 1246. So again, here's what we look like earlier in the week. Consolidation right above support, break, and the plummet begins. Any questions on gold trade? So look for near-term resistance at 1254. Obviously pay very close attention to these median lines. As far as the broader bearish invalidation, it would be all the way up at 1273. I know that's a ways away from where we are now, but you'd need to break through essentially the weekly open to invalidate this downside pressure that we're seeing here in gold. All right. I do want to go real quick back, Kelly, to the Aussie dollar. You had a question on target for Aussie. So on the upside, if we get the reversal, the first target from a scalping standpoint near term, Kelly, for me would be A, the yearly open at 72.81. B, I'd look to shave a little bit more off just towards the upper parallels here of this basic formation, which continues to hold price decently. I'm not too crazy about it, but that takes you just a bit higher. And then, on that prospect, I'd probably be looking to get back on the short side. I mean, you'd need to clear like 73.60 for me to get anywhere near, long-term bullish on Aussie. Make sense? Says, gotcha, appreciate it. Anytime, anytime. But just remember, on an opening range basis, heading into the close of the month, I don't want to start fading the direction of the trend, right? On an opening range basis, this thing would probably push near the extremes to close. Okay, so moving right along, having covered gold, let's jump into dollar CAD. So here's what dollar CAD looked like yesterday. We're testing that major resistance near term, just under 131.13. Here's what it looks like on the, oh, actually we pushed right through it, didn't we? Yes, we did. All right, next target 31.66. Both of those noted on yesterday's piece. So if you guys recall, again, the major level to beat here, and we talked about it for over 2 weeks now, was this fib confluence here, 129.75 into 129.85. If you're sick of hearing me say it, I'm sick of saying it as well. So we finally cleared it on this move here post the FOMC. And although we tagged this on in yesterday's radar chart, as I noted, can't rely on it too heavily yet. Having said that, hindsight looks pretty good still, right? Here's what it looked like last night. We pivoted above it and then came back and tested it as support, which is always what you want to see. So that upper median line parallel now converges on the 31.66 target basically over the next 2 hours. Okay, momentum is in overbought territory. If you're on the long side of dollar CAD, that's your next topside objective that you want to just be mindful of. On the pullback, I'd be looking for support right along the median line, especially with the pivot that we've already just seen off it. Subsequent targets to the upside, you have 32.18, and then a much more significant resistance into the 133 handle here. But looks like a breakout to me, guys, and certainly a big, 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 big level of resistance that we're clearing. And not only did we clear it, but we closed above it, which is why we wanted to highlight that yesterday. And again, that longer term median line from the 2006 lows coming right into play on that break that we made yesterday. I needed to get up earlier and catch that early trigger in dollar CAD. Yeah, it was a tough trade to get into, to be honest with you. I missed it, Eileen. I'm kicking myself too. I definitely missed it. I mean, the real entry was post-FOMC, especially because the post-FOMC rally took you through the weekly opening range highs. And at the end of the day, it was all about this resistance target. We've been talking about it for weeks. Finally pushed through it, came into resistance. You had a very little opportunities to try to get in on the trade for the long side, except heading into basically the London Open, excuse me. That's when the opportunity for the London opening range break finally gave you to jump into the position. All right, so dollar CAD, an imminent resistance coming up, or immediate resistance, 131.66. Stay constructive above the median line. Bullish invalidation is where the bearish invalidation was. Same level, 29.85 into 29.75. Big, big region, and it converges on the lower parallel now. Any questions on dollar CAD before we move off? A quick heads up, if you think the dollar CAD volatility is done for the week, I prompt you to take a step back real quick, because tomorrow you do have some double whammy data. You have the employment figures coming out, you have retail sales figures coming out, as well as the inflation picture. Inflation is expected to soften a tad. What you want to be paying attention to, again, as always, is the core reads, okay, which are expected to soften. You don't want to pay too much attention to the month-on-month, but the year-on-year from 2.1 to 2%. And slowing inflation has sort of been the global theme that everyone's trying to stoke inflation, right? So we'll definitely be looking for that print at 8:30. You also do get the retail sales data, which is expected to obviously to drop off pretty dramatically from the previous month. So you could have an opportunity here where if the data comes out stronger than expected, you get the snapback that we need to be able to finally get an entry on this. Or, if it comes out stronger than expected, you'd look for that rally to give you a breakout of the topside formation. And remember, a topside break of an ascending formation will typically be the strongest part of the move. That means that the market has so much push through it that the trend is essentially rupturing to the upside. It's like shaking a bottle of soda and then opening the cap. So the next major target is going to be that 133.11, 133.25 key resistance here. So we'll see if we can't get a play on this tomorrow if you're not already on the long here. But looks like a pretty good move. Again, constructive above 29.85. Any questions on dollar CAD? Okay. Euro dollar. Here's what we looked like last night. Here's what the daily looks like real quick. Okay. Dipping below that 38.2 retracement, that's 111.95. I'd be looking for, again, same theme with a lot of things. This is sort of confirming a nice break to the downside. You could see this drop a little bit further, but structural support coming in lower, the former upper median line parallel coming in just lower. You have the 100-day moving average, which comes in just around 1150. Here's the chart from last night. And there are those levels that we were talking about. So downside bias remains in play, but you're looking for some exhaustion lows heading into this 1187, 1195 region. Just below it, we noted that there was a lower median line parallel, and it looks like that's sort of what we're doing right now. Again, that 100-day moving average, 1146. These are exhaustion points that you're looking for the downtrend to possibly find sort of, as you say, a jackknife effect, right? Or some sort of inflection. The bottom line is it's still very, very apparent that you're in a pretty strong downtrend here. If anything, you'd be looking to sell rallies, but at this point, at the extremes, towards the latter part of the week, I am weary as you continue to mark ongoing divergence momentum here. So I highlighted this yesterday because I thought if you do get a downside break here, it would actually be a nice trigger to drop into that support zone. So you can actually take another short against the range highs to try to move into that 1187. But the move didn't even give you that trigger break, which again makes another divergent point. So now you have 1, 2, 3, 4 levels of divergence on the way down. Makes me a little unsettled to try to track this any lower. That said, you also do have a resistance trigger that's ready to go, and a pop back above this, you'd look to target the median line, if not the upper median line parallel, before getting short again. But it looks pretty clean. I'm pretty surprised that it continues to hold. If you guys remember, we put this together again here in the webinar yesterday, kind of adjusting the slope a little bit to really get you a little bit more fitting with what's happening in price, I want to say. So if this is the proper slope, we're at support on divergence. Look for the snapback. So another one where you're pretty much there. Pretty much there. By the way, here's what it looked like earlier in the week on the euro, right? Really clean weekly opening range break. We finally got that break yesterday. Now we've taken out all these targets into 112.14. We sat there for a little bit. And here's structural support, that lower median line parallel. Euro yen short, Sophia. I don't know how I feel about that. Let me take a look. I mean, that's kind of counterintuitive for me because I'm looking for yen weakness and euro's at support. So if anything, I think, again, it's just my humble opinion, Sophia, I think you might get a little bit more of a rebound in euro yen. I haven't really been following it. Let me take a look. Ooh, that's interesting consolidation there. Oops. Okay. I just jumped into a Aussie position, guys. I do think that you're kind of seeing some constructive movements off the low. Keep that in mind. But this, it's not the cleanest. Let me come back to this, Sophia. Are you in a position right now? If you are, I'll kind of focus on this right now. But I did want to take a look at dollar yen first because I think it'll give us a little bit more of a tell. This has simply made a very objective weekly opening range. I really don't have any immediate near-term bias until you clear that. So here's your weekly open. You set a weekly high. You test the lows, holds, and you're kind of in consolidation. Momentum, 60-40 bounce doesn't tell you much either. So as far as the near-term picture, there's nothing screaming at me here as sort of a setup to be looking at. Let's look at dollar yen real quick. Here's what dollar yen looks like. We did cover dollar yen in the update from the 17th. And you know, the major level to look at was this key region at 109.46 into 109.57. Huge region. You know, we talked about that for a while. Overlap of the 1618 extension and a 618 retracement. You had the median lines, long dated median lines we were following also on that region. We popped through, but it's been a pretty clean rebound off that former resistance, now support. Like I said earlier in the session, so I do like yen weakness. You know, it's dollar yen strength. So at this point, I'm not really sure if I would want to take a euro yen short. If this had come into a little bit more of a key resistance near term, it's a trading signal from Daily FX. Okay. Yeah, I'm not going to comment on that, Sophia, but just from a trading near-term immediate scalping perspective, like I said, if this had stretched into that median line to the upside into 110.58, who was asking about 110 earlier in the session? Gary, was that you? You're looking for 110.66. I think we're looking at very similar things. There's also a sliding parallel. Here, let me zoom out for you. Right, there is also a sliding parallel that you see there in red just above. And then you have that 786 retracement, which is at 110.53. So if we had stretched into that high, yeah, maybe at that point, Sophia, I'd be looking for a little bit more of an exhaustion play to the downside, a recover play. That would be yen strength. That's where euro yen, I think, will shine to the downside. But with euro dollar essentially searching for support, I just don't know if I'd want to necessarily start fighting that. Does that make sense, Sophia? Again, I'm not a big fan of like being, oh, euro dollar is doing this, dollar yen is doing this, here's what euro yen should do. But I think with the dollar story, that type of thought process, at least in this environment, does start to make a little more sense. So as far as dollar yen is concerned, no change to our outlook. We remain constructive above 109.46, 109.57, near-term resistance 110.53, and that's, you know, just above that. I think the level that you were talking about, Gary, I think that's sort of the level to beat. It's basically a swing low that you made in April. That's sort of the level to beat for the next leg higher. And this is a longer day at 2618. I don't want to stress it because that same level also ends up being the 88.6. So just keep that in mind. Sophia says, sure. Gary says, yep, that was me. All right, cool. All right, so that's dollar yen. We have to go over the sterling crosses and sterling dollar real quick. Gold we covered. Okay, and Kiwi dollar, obviously we want to take a quick look at. So let's jump into the pound crosses. One last piece of data I want to look at was the pound data that we got yesterday on retail sales, or earlier today rather. Here's sterling dollar looks like on the daily chart, and here's what we look like on the 30-minute. Oops, wrong one. Okay, so pound dollar just went right into the major near-term key resistance level at 146.64. That's right here. So again, this is from earlier in the week on the 16th. We sort of validated the broader breakout with the move above 44.70. What was that? 44.72. Came just shy. I think the high today was just shy. The actual exact high was right around 44.62. Okay, so we missed it by like 4 pips. Long story short, what I wanted to highlight is, again, building divergence into the highs and an exhaustion thrust just shy of key resistance. So the near-term immediate upside bias is vulnerable at this point after failing at that level. So while I'm not going to necessarily start jumping into shorts right now, I just wanted to highlight sort of that momentum profile that we're getting into a nice resistance target to the upside. So still think we have plenty of upside to go in the British pound as far as longer term. Excuse me, let me take that back. I do think that we get another opportunity to get another long play in the pound. But from this point, the immediate bias is a little bit more of an exhaustion play. And you can see that on the daily chart with that sort of wick and this basic 50 line for the broader structure we've been following off the lows, right? Sort of exhaustion, support, resistance. Again, today's close is absolutely paramount. So if we pull back from here, expect another possible down play, but I think you get another opportunity to get a stretch back into it. So we're going to put the long bias, at least on the immediate level here, a little bit more on the back burner. Look for the pullback to give us that play. Fits in perfectly with the sterling, with the dollar index, stretching into that high. We talked about all this yesterday, guys. And then pulling back, looks like, hopefully, today we'll get that. Well, before I move off this chart, just to put things in perspective, here's what the data looked like this morning, retail sales. So you kind of blew it out of the water with the month-on-month. You sort of doubled the year-on-year expectation. Core, I guess if you include auto fuel, that also beat year-on-year, doubled. So even the revisions were a market improvement to the previous month. So from negative 1.6 got revised up to negative 0.7, from 1.8, 2.6, and so forth. So real strong data showing the health of the consumer is essentially there. Retail sales are up. So with that in mind, seeing the sterling sort of fuel that final thrust into resistance, a little exhaustion blow-off, sort of makes sense. So look for some near-term support right around that 145.50 level. I wanted to rework these charts while we were together here in the webinar because I wanted to highlight one thing. I'm going to get rid of this formation right here. It served us well all week long, but at this point, not really a fan of the fact that it didn't offer us some guidance on the highs here. So we'll ditch this near-term slope. Remember this trend line from last week? Just to recall real quick, if we remove all the slopes, give you a little bit more perspective, break of resistance, test to support, move off. I mean, we like to make fun of the sterling sometimes as being the biggest fake out trade ever, but sometimes it's pretty clear. Okay. Okay. I was looking at this ahead of the webinar. I just want to put things in perspective, guys. When you're working these levels, again, this is just sort of on the fly analysis here, but I was sort of checking this out earlier. I don't really want to rely on it yet. A modified pitchfork with the basically just matching basic trendline resistance here. Something like that. Basically, the purpose of what you're trying to do by adding on these pitchforks is look for where, if we're still going to maintain the upward slope here, where could we find some support? And the lower median line parallel should be your inherent like bearish invalidation level, so or bullish invalidation level in this aspect. So the only thing I wanted to highlight is when you do this and you take just the basic opening range high, it basically converges right around here, 45.20, 45.28, and that would keep the upward focus in play while above this region. So that would be the first area you'd look for on a pullback to find some support, some long triggers. In such a scenario, you'd look to play again that rally. Again, we're trying to get into this major key region of resistance here for the pound, but you're at risk immediately below this. Okay, so we'll continue to track this one. Again, watch that divergence in the highs. Still at risk to get that cut a little bit deeper, looking for 45.28 to find some initial support here. Rick says, sorry, was just able to sign back in. When you say cable in the swing sterling dollar update, what does cable mean? Rick, cable is just another nickname for the sterling. That's it. And it harkens back to the old days when there was an actual cable laid across the Atlantic to the UK. So a lot of times they'll call sterling cable. It's more of a trader talk thing. Sorry about that. He says, thanks. You're more than welcome. Yeah, anytime we throw out some slang like that, guys, just feel free to ask. From the UK to, what's that? The colonies? You got it, Graham. Okay, so pound, we'll look for some structure. I wish I had a little bit more clarity on the structure, but the daily chart looks pretty clean. The broader picture looks pretty clean. We'll look to see how deep this pullback gets, see if we can offer some possible long exposure again here in the pound. Pound yen, oh, she's a beast. So although we closed, 150 pips on this yesterday, showed you in the webinar, it kept going. She kept going. She kept going all the way into that 160, 50, 63 target. This is a big region, 100% extension, 618 retracement, Fibonacci confluence. I thought this would have offered a little bit more of a stringent resistance. You're straddling it at this point. You saw another spike in overnight spike as high as 161, just missing that 88.6 retracement. And then we kind of pulled right back into this key zone again. So I'll be watching for an inflection of this into the US Open. If we break lower, that's my signal that the sterling's probably going to pull back a little bit more, that dollar yen, the top side might be limited at least, but you know, big range, 57 pips, even wider than when we wrote that report earlier in the week. Top side is still favored at this point. Remember, we brought up our bullish invalidation level. We're going to go ahead and bring that up again. At this point, the immediate bias remains constructive, but 59.30. Okay, and that's on account of just this amazing clean pivot line that we've been working with. It's just a median line parallel, the same operative slope. So let me zoom out, kind of give you a picture of that. Right? And that converges on the key 618 retracement of that decline off of the April high. So both vulnerable for a pullback, both showing strong divergence into the highs. Both would give us an opportunity on the pullback to get back on the long side. Make sense? And again, that's what sterling yen looked like, whoops, earlier in the week. She's taken out all the topside targets, pretty much. So if you need to take a picture of this, guys, feel free. Let me just center it for you. Sterling dollar having trouble long because of the strong dollar, maybe better sterling yen. Yes, on account of both of those, because sterling yen in general, we do like that yen weaker story. So the sterling yen has been giving you a wider ATR, and the breakout has been much, much stronger. So if you remember yesterday in the webinar, we were talking about both of those. I was trading the sterling yen just because of the reasons that you're noting. Dollar wasn't even as close to that resistance level, so I would have liked to see that, give us a little bit more. And we're getting it now, but she better simmer down pretty soon because you're coming in some serious resistance here. So we're looking for that sort of blow off in the dollar index today. Okay, so we covered euro, sterling, sterling yen. Just want to touch real quick on Kiwi. Here's what the 30-minute looks like there. The only thing I wanted to highlight here is it looks to me like it's trying to break the weekly opening range low. So here's your weekly open. Here's your high, which came in or tried to struggle basically at the 2016 yearly open, which is 68.27. You failed on there on divergence. We talked about that yesterday with the pullback sort of sitting right there. Breakdown on FOMC, came back, checked the underbelly of the opening range, and it's holding as resistance. So also, the 50 line has been incredibly clean this week. Resistance, breakthrough, support, 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 breakthrough. A little messy around FOMC to be expected, but resistance and resistance in overnight trade into London. So structure looks really clean. Structure looks really clean. And that's one of the most important things to have conviction when you're getting involved in near-term trades. On overnight, that dip that we just made failed at the monthly low. So although we don't have it highlighted here, it is in the report, guys, that 67.14 into 66.99. So watch for some near-term support here. Again, you're getting building divergence in all of these pairs as they're coming into the lows. So either one of two things. Either this is going to be a great trigger on a break lower, i.e. break higher in some of the other pairs that we were looking at, or you look to play that rebound, or you look for that rebound to get you another opportunity to get back on the short side. But at this point, we drop our bearish invalidation from the yearly open to that 68 handle, which converges pretty nicely on the upper median line parallel. A break lower beyond 67. You really don't have anything on tap until the median line, which, depending on where you are in time, converges on the 200-day moving average. And that's somewhere in the range of like 66.40s, 66.50. So some pretty key levels to the downside if you do clear that 67 handle. Hey, Joe, I missed your comment earlier. I'm sorry. Morning, Mike. Took advice to re-enter long dollar CAD yesterday at 129.30 area. What's the next leg to re-enter the long for? 130.40. We did go over dollar CAD on the pullback. So 131 is the major key pivot that, or at least the Fibonacci resistance level that we were looking for. We kind of sailed through it. So I would say look for that median line that we've rebounded off of an overnight. It looks like it's giving good guidance to trade. That would be my first area that we would start to look for some support. So depending on where we are in time, what was your comment there? 30-40? 30-40 looks like a decent pivot. Here's what I would say. The way I decide those kind of things is once I get a little bit more conviction of a topping pattern, or that we're putting some divergence, a trigger break to the downside, I would tack on a quick retracement, and then that's the way I would play it. So obviously it's too early to do this, just as a disclaimer. But I'd start to look for something like that. And then I'd start to see where a 38.2, where a 50 comes in, where the 236 initially comes in. Obviously, I have no way of validating that this is a high, so this is complete nonsense right now until we get some sort of signal, whether it's divergence, whether it's price action, whether it's an opening range break, something to tell me that this is a high. So this has no validity, but that's how I would decide where the initial entry would be. Look for a basic 236, look for convergence on one of your median lines, something like that. But I wouldn't really necessarily look to play the long side of dollar CAD beyond here until we pull into a little bit more of a key support. Kelly says, hey, pal, are we into dollar weakness now? Well, we're looking for dollar resistance. We don't want to play the dollar weakness yet, Kelly, until we're getting into dollar resistance, right? And it looks, that could be it. That could be it. That's pretty close. See the 30-minute. Gold coming near support, beautiful. Dollar index, building divergence. That's a third divergent point at the highs. Yeah, I wouldn't be looking necessarily to get long the dollar from here. Make sense? Just the immediate term, right? So just to sort of harken back to that Aussie position, looks like it's teetering out here on some divergence at the high. So I'm going to go ahead and take a little bit off the table. We had 20 pips earlier. Remember, it's a little bit tighter of a trade, so I'll take a little bit off the table here. But we'll be looking for that pullback to give us a little bit more support. Let me show you where the 30-minute is here. Yeah, so nice initial reaction into the lows on divergence. So let's see if we can get that trigger break to the upside. Again, clearing 72.10 would be a good start here for a near-term low in Aussie dollar. And by the way, if you get that, and this is a perfect example, Kelly, for where we would play that sort of reversal play, right? Where we would get the conviction to put on a retracement. So you're seeing a nice reversal in price here. If you get a trigger to the upside break, obviously the only thing that matters is the 30-minute close. So until this candle close doesn't mean anything. But if we do, then a quick retracement here of like just a basic weekly range would give me some guidance. So that would put into focus sort of what, 72.20? Well, nice pivot in price there, right? And then once we get a little bit more structure to the upside, you'd start to mess around with some ML formations and see if you have any sort of structure to the advance. Again, way too early to do this, but if this is, in fact, the slope that we'll be following on the advance, keeps your focus higher while above that lower median line parallel, which right now comes in at 30-minute close right around 71.80. Kelly, I like it. You know I'm in it. 71.77. That's cool. Your trade taking off. Yeah, well, again, I'm much heavy leverage trader, so my initial entries tend to be pretty heavy. I'll continue to peel off as we move forward through the targets. All right, that's Aussie dollar. We went over dollar yen, Kiwi dollar, sterling, sterling yen. Gold, watch that support. SPX, the only thing I wanted to highlight, excuse me, there is, if we push today through this support, I just want to highlight, we've been talking about 2040 into 2044 for the entire month, essentially. It's the monthly opening range low for all intents and purposes on a closed basis, and it's straddling, the monthly opening range straddles the yearly open, which was 2057. So what I wanted to say just is this: momentum continues on this downward trajectory. If we close sub 2040 today, I would consider that a break. And in such a scenario, you're looking for an initial target at 2021 would be sort of, adjust that a little bit, where your channel support converges on just a basic swing low there. And from there, beyond that, obviously, you have the 200-day moving average comes in at just above 2,000, and a basic 38.2 of the yearly range comes in down here. I know that's not the popular trade to be bearish, to that magnitude, but that's the scenario if we close below that position. If we rebound like we have the last 5 attempts, 1, 2, 3, 4, 5 attempts at a move below, it's nullified, which is why I don't really trade intraday SPX. But it's very good to know the invalidation levels and the levels at which change our way of thinking, right? Change our outlook on what the markets are going to be doing from the risk side. So this is still the pivot of interest, and still on a closed basis really going to be the make or break level that the SPX needs to clear, both to trigger a downside correction or the inflection that we need to hold as support if we're going to break the opening range to the upside. But keep in mind, it's the 19th, and we haven't broken the May opening range. So when the opening range for the month holds for that duration, when you get the break, they tend to be pretty much more significant, right? The move, the reaction, the rally or decline tends to be a lot more stern. So we've been holding the opening range for 19 days at this point. We'll continue to look for a break outside of that zone. All right, so if there are no other questions, we'll go ahead and wrap things up. I want to remind everyone, Jamie's doing his midweek strategy webinar today at 1 p.m. He's feeling a bit better, so he's going to be on the mic in a few hours. Keep that on your schedule. Till then, I will see you guys on Monday morning. Kelly says, how do I email you? You can email info@sbtradedesk.com, and our intern will forward it to one of us if you reference one of us in it. SB Trade. Guys, at any time, you can send an email to that regarding anything. If it's a question on inquiry on billing, if it's a question on a report or something, feel free to get in contact with us. Any and all feedback obviously is always welcome from our end. So always keep that on mind. As far as Monday webinar at 8 a.m. Monday on FXCM, geez, I don't know why it says 8 a.m. I'm not sure what's going on with FXCM. It's going to be at 8:30 as usual. On Monday, we'll do our webinar, our first public webinar for FXCM in over a month. Since my injury, so it's going to be good to be back there. But we'll be back here on SB Trade Desk for the usual webinars Tuesday, Wednesday, and Thursday. Guys, best of luck trading. Have a great weekend, and I will see you guys next week. Cheers.